What's good, ladies and gentlemen? Welcome to SK Wealth Academy podcast number 130. China continues to tighten the squeeze on New York and London gold futures markets. Now, this week I actually do not have time to bring you volume number 7 of Financial News of the Horrific and Parasitic, but in its place, I am bringing you this very important story. So next week I will return to bring you financial news of the horrific and parasitic. But in the meantime, I want to discuss about this really important gem of a discovery I uncovered on Chinese financial news sites. Now, last month on my news site at malamalama.com/WordPress, I informed you of how Chinese regulators, unlike American and British regulators, have been closely watching trading action in the Shanghai futures market, specifically as it relates to gold futures trading, and had sent notification in the month of June to a number of traders they suspected of spoofing the gold futures markets because they had identified 77 separate cases in which they believed traders were spoofing the gold futures markets, and they suspended the trading privileges of some of them and notified others they were being put under very close surveillance for questionable activity. So earlier this month, the Shanghai Futures Exchange continued to choke out manipulative behavior in the gold futures markets by making significant alterations in the delivery rules of their gold futures contracts. Among the revisions they made effective immediately were significantly shortening the delivery period on gold futures settlement. And as you know, the vast majority of gold futures in Shanghai settle in physical gold, unlike in London and New York, where the vast majority settle in paper fiat currency. Although this year, for the first time in our lifetimes, there is a decent amount that is being settled in physical gold. Now, decent amount, I can't remember what the percentage is, but it's nowhere near the 90 to 100% physical settlement rate in Shanghai. If they settled at that rate, most likely all the gold, I remember calculating one year, not this year, but in previous years, if the amount of physical gold that was settling in Shanghai settled in New York COMEX warehouses would have been emptied out, I think, in 2.5 days. That's how ridiculous the difference is in gold futures trading in China versus America. So among the revisions they made, as I got sidetracked there for a little bit, was they cut the delivery period on gold futures in physical settlement from 5 consecutive working days after the last trading day to the first working day after the last trading day. In other words, they cut the delivery period from 5 days after the last trading day to just 1 day, single day. And they also cut the delivery period of other futures products like copper, aluminum, etc. from 5 to 3 days after the last trading day. So this is very interesting because the only commodity for which they cut that delivery period from 5 days after the last trading day to only 1 day was gold. No other commodity. And I believe there is a reason for that. I believe that purpose was to ensure that all traders that enter trades in the Shanghai Futures Exchange possess the required upfront physical gold amounts to meet delivery without any trader having to worry that their desire to take physical gold delivery will be unmet due to physical gold supply shortages that are currently being experienced in New York and in London. So comparatively speaking, CME delivery procedures for gold and silver futures contracts in the United States allow for an extended window of physical settlement that allows traders ample time to source physical gold and silver to meet requested physical settlement. CME delivery procedures, Chicago Mercantile Exchange, are as follows. Quote, delivery may take place on any business day beginning on the first business day of the delivery month or any subsequent business day of the delivery month, but not later than the last business day of the current delivery month. So that gives them the entire month. And about a year ago in New Delhi, market regulator SEBI finally amended their delivery procedures on commodity futures in India, because before it was the wild, wild west. They had different delivery procedures across different exchanges in India, and there was no uniformity. And their market regulator finally stepped in and put an end to that madness and said the minimum duration of a staggered delivery period at 5 working days for all commodity futures. Now, the staggered delivery period refers to the window during which sellers or buyers have open positions may signal their intent to give or take physical delivery of the underlying commodity represented by the futures contract. So as you can see, that China's changes to its delivery procedures for gold and silver futures contracts make them the strictest in the world, bar none. But this significant change went unreported by every single financial mass media outlet in the world. I did not see any mention of this very, very significant change. And why do I say it's so significant? First of all, because it tightens up the delivery period. That in itself is going to decrease any risk of fraud happening on the Shanghai Futures Exchange in regard to trading of gold futures. And furthermore, they gave as their reasons, quote, to help companies better avoid risks, as I just mentioned, through futures in the production and operation process, and further promote the function of the futures market to serve the development of the real economy. Let me repeat that in case that did not sink in. To serve the development of the real economy. This stated mission of the Shanghai Futures Exchange is the exact opposite of the mission of the New York and London gold and silver futures markets, because their mission, as has been exposed this year, is to allow manipulation of gold and silver futures prices. So there's a total disconnect between gold and silver futures prices and the subsequent spot prices and real gold and silver physical prices. Because if there wasn't that allowed and encouraged disconnect in the London and New York gold and silver futures markets, then you wouldn't see this growing divergence, especially in silver, because people have no idea. Even when silver retreated back to $26 in the futures market earlier this year, the price of 1 ounce Canadian silver coins was still going over $33 when the futures price was 26. There's tremendous divergence between the fake derivative prices of gold and silver established in the illegitimate. I call it illegitimate because there's so much spoofing and banker manipulation in the New York and London markets, and Shanghai is cleaning that up and not allowing that to happen in their market. So most likely, as I said, their enablement of much stricter delivery regulations than exist in London, in New York, in New Delhi was because of their reported discovery of 77 separate instances of gold spoofing on the Shanghai Futures Exchange this past June. And if you've missed my article, I wrote a complete article about that event too. I will put the links in the show notes below, so just go check it out. So indeed, I believe what this will manifest in the future are consistently higher gold futures prices in Shanghai than in London or New York. As well, I believe that if Western regulators continue to allow gold spoofing in Western futures markets as they have done during our entire lifetimes, that they will only hasten the demise of their illegitimate Western markets as China continues to take action to stop banker manipulation of gold and silver futures prices in their market. So I hope that in lieu of my normal financial news of the horrific and parasitic, that this, because when I discovered this, like on Chinese websites, I was astonished that nobody reported on this in the Western media, because I believe this is huge, huge news. And anyone that understands the mechanisms by how gold and silver futures pricing works will understand what I'm saying. If you wonder, like, why am I so excited about this news? That because it has real consequences for the prices of physical gold and physical silver moving forward. Okay, thanks so much for watching. Please comment below. Please do subscribe if you have not yet subscribed. I found this interesting glitch in one of my other podcasts. It was a podcast entitled What I'm Willing to Die For. At one point it had 216 views, and I noticed one day when I just was looking at it, because I'll just go back when I post things to see how many views did this video get, the week after. It had 211 views. So I was like, how can 5 or 6 people have unwatched my video? That makes no sense. And so I took a screenshot of that 211 views, and guess what it is? Go look at it right now. It's 210 views. So why is Google and YouTube like, I only have 1,260 subscribers, or maybe I have 5,000, and Google and YouTube is not allowing the subscription count to go up. So that's why I ask all of you to comment, like, and subscribe, because if you have not yet subscribed and you find the information, you're coming to my channel because you're not getting this information anywhere else in the entire world. Because I guarantee you, if you saw the information I just gave you anywhere else in the entire world, in any Western or European media, then please note below. Because I don't believe anyone in the entire world has covered this topic, which is of great significance moving forward. So if you get value, please do subscribe, and then just comment below, subscribe, because what I want to do is I'm going to look before I upload this video to see how many subscribers I have, and then if say like at least 5 of you will take 5 seconds to write subscribe that haven't subscribed, then I want to see if my subscription count goes up 5 people. So maybe it's like they have a thing where they subtract 1 subscriber for every person that subscribes, because I wouldn't be surprised if my subscriber count goes down 5 subscribers if 5 people tell me they subscribe. Anyways, I'm curious to know, so please help me out. Okay, thanks so much for watching, and as always, remain intensely curious. So long.